The market got hit where it hurt most on Friday in the AI sector, specifically AI chips. And that group today came roaring back. Intel sparked fresh AI optimism. Marvell added some index fund fuel. SMH surged 5%, and the fear trade backed off. But here's the catch: the rally looked powerful at the top, while the average stock still didn't fully join in. That makes tonight's market outlook all about one question: did chips just save this rally, or did it only buy it a little bit more time? Today is Monday, June the 8th, 2026. This is the market outlook from marketscholars.com. My name is David Settle. All right, the most important chart of the day today was the semiconductor chart. As you can see, that really dropped significantly on Friday. We didn't quite recover everything that we lost on Friday, but we recovered a good chunk of it, up 5%. It kept the near-term line from dropping into the lower reversal zone. The momentum line jumped up from extreme lows. The intermediate line stayed in the upper reversal zone despite being between below the market sentiment line. If you take a look, it's back above the 17-day moving average, flirting with the 8-day, back above the 23% retracement. So all really good signs, again, for the most important industry. This was the biggest reason why we fell on Friday, and it was the biggest reason why the markets, to a small degree, rebounded today. You can see even the volume was above average. The range, if you don't include the gap, was almost average. When you include the gap, it was significantly above average. So really, really good rebound in an area of the market that we really needed the rebound. Now, before we get into the other four charts, really quickly, like today's video, come down here to the bottom, hit that thumbs up right there. Also, you can subscribe to the video right here by hitting that subscribe button. If you click on this link in the top right corner of your screen, that takes you to today's Market Outlook blog post. As you can see right here, it kind of gives you an idea of what all happened today, why it matters, what it means, a lot of educational aspects of today's move and what to watch for going forward. That's all in the video. You get that for free. When you click that link, this is what it looks like. This is what it looks like here. You have to be logged in. So again, all of our subscribers, even our free subscribers, just click this login button that takes you straight to the blog post. Otherwise, click this button here, and that will subscribe you to the site for free. If you click that button in the top right corner of your screen, that shows you what you get for free on our website, including the market cycle roadmap, which is it shows you how the bear markets evolve from stage to stage and whether or not we are headed into a bear market or not. So that's a free guide there. If you click on that button, you can see here too, that takes you to this page, and it's a really easy way to subscribe for free to get this and everything else, including these market outlook previews and blog posts and the Friday version. Right, you get the Friday version, the full free Friday full video as part of being a member of our basic subscription. All right, let's hit the next chart. Two of the semiconductor stocks that did so well, one was Intel signing a deal with Google. You can see jumping. I mean, it really dropped. Like, that's a concerning drop, breaking that far below the 30-day. The MACD had gone negative. Stochastics was in bearish levels. But again, a nice rebound today, 11% gain, almost back up above, pretty much sitting back on the 8, 17, and 30-day moving averages for that matter. Marvell Technologies got included in the S&P 500, so it jumped up 9%. It dropped, didn't have as big of a drop post its earnings here. Didn't have as big of a drop on Friday, but it stayed above the 8-day, and again rebounding up 343% over the past year. That's a strong move up to the upside. Now, the flip side of this tech story today, tech rebound, was Apple. Apple started its worldwide developer conference. It dropped below its 17-day moving average, and MACD and stochastics rolling over. Big volume today. Not a good sign. Long upper shadow. As you can see here, this long upper shadow, all of that suggests that there's some potential weakness ahead. Now, how far down can we go? Your intermediate declines don't start until you break the 50-day. And so there's a good chance we might make a run down to the 50-day. There's really strong support with the top of the value area there and a lot of volume, these old highs. So I think worst case scenario, we have a deep near-term decline that gets us down into that levels. One of the other positive developments today too was a huge drop in the VIX. The VIX dropped big time, back below 20, back down into the lower end. We actually opened up in risk on territory after jumping from extreme lows on Thursday's close to well into like risk off territory, because this is the neutral levels here between zero point 0.9 and 0.95. We ended up finishing at the low end of neutral, but still pretty good move. Even the VVIX dropped, from being well above, well into the high 90s, all the way back down to 92. That's a really good sign. Let's see here, VVIX. You can see that big time drop in the VVIX. So again, it suggests that Friday's jump in volatility may be very short-lived. Something, again, similar to other jumps in volatility that we've seen in the past. But the fact that we dropped, we got above 100 actually, 102 on Friday, but all the way back down, not just below 100, but all the way back below 92. I mean, last time we got above 100, we just kind of stayed in the high 90s and eventually worked our way down. Well, we dropped all the way back down in one day today. I think that's a very good sign for the markets. We're not out of the woods though. From a longer term perspective, I don't think the intermediate decline's starting anytime soon. But the breadth still looks really bad. As you can see, the number of stocks with the 50-day moving average still down at low levels. If I look at the ratio chart here, not the Q's IWM, so to speak, but the S&P relative to its weighted, the equal weighted index, you can see it's still down. It was up today, but it's still down here. And that's highly correlated with the markets here. So I think there is some concern. Again, I don't think this current near-term decline is driving. I go into a lot more detail in the full video about why I think that we're probably going to bounce off of this near-term low point. But I don't know how much longer we're going to be able to maintain this bullish intermediate trend, because we're starting to see a lot of signs, including this one and the others I brought up in the full video. But we're seeing more and more signs that we're getting closer to an intermediate decline on the broader index and other indexes too, for that matter. And that does it for today's Market Outlook preview video. If you want access to the full video, like Fridays, for today for Monday, click that link in the top right corner of your screen. That takes you to our foundation tier page, our sign up page. Again, you can sign up for just $29 a month. That's about $1.40 a video. And you get access to the full video, including the trade that we do at the end of the video. We actually put those trades on before the market closes during our Market Outlook live video. That's a live stream we do on our website. It's about 5-10 minutes long. We do it every day at 3:30 Eastern time before the market closes. We place today's trade, Market Outlook trade, and then we manage all the old Market Outlook trades that we do, including, we talk about whether we should close them. We actually closed a couple today. We also talk about whether we should stay in them. And then we track the results of all of those trades. You get access to that as well, our Market Outlook Live trade tracker. So all of that for just $29 a month. Just for some context on the value that you get out of the Market Outlook video, not just you get good value out of the content for 30 minutes a day for $1.40, which is not very much. But the trades that we've done, we generally risk the amount for about a $25,000 account. And those have made over $10,000 last year, and we're already up a few $1,000s this year on the Market Outlook trade. So they do very well for, again, just $29 a month to be able to get access to those. So again, thank you for watching. Have a great rest of your Monday night, everybody. Follow me on Twitter at David Settle for more content between the videos. We'll see you guys tomorrow.